What's good? What's good, y'all? Welcome to another episode of Chief and Chart. It's your man Don Bucks, and this is a Rap and Dope production, home of money conversations. You know, the home of money conversations. We talk all things black wealth and all that, man. But this particular show, we are talking about options, stock options, and the chart, man. So make sure y'all hit the like, subscribe, and the notification bell. I mean, because this is for y'all. This is for y'all, people that are interested in the chart, because you know the chart is your eyes, and we in this shit to make money. So if you can't see, you can make money. And the charts are your eyes. You dig? So if y'all tuned in yesterday, y'all know that the market is booming, right? It's been booming all week, booming for the past couple weeks. But if you tuned in yesterday, I told y'all that the market will be consolidating some of that strength. And what does that mean? It's going to pull back a little bit, start trading sideways before it continues, right? Because we all know the market just don't go straight up, but it has to retrace before it goes up, retrace, go up. Same thing on the downtrend. It just don't go down. It goes down, retraces up a little bit, goes down, retrace up, go down. So let's get into it. How was your trading day anyway? Because I didn't I didn't initiate any new positions personally. Because if y'all tuned in, y'all tapped in, y'all know what I got going on. I'll trade one stock, you dig, for example purposes, because this is to help you guys get confident in what we're doing here and what you're seeing. So y'all know we got to keep the eye on the spot. Keep your eye on the spot. So this is what the SPY is doing. As you can see, we broke out of that downtrend right here at the last swing high. So we're up. Look at all these green bars. It's mad strength here, right? Mad strength going on. And y'all know the sign of an uptrend is twice as much green as it is red. And that's what you're seeing here, right? So it's hella strength because it done broke out of the downtrend. Everybody is positioning now to the upside. So what do? We wait for a pullback to enter. So this is the daily. As you can see, it's resting on a support level, right? It's resting at a support level. So let's go down to the trading time frame and see what's going on. So, yep, it's resting on a level, right? So, yeah, let's go to my stock. So what do I see there? Like I said, I think it's consolidating some of the strength because when it broke that last swing high, it just went nuts. Right here, when it broke this last swing high right here, this level, it just went nuts. Right? It's been going nuts because this is where it bottomed out at. This is where it bottomed and start trading sideways. But then once it broke the downtrend channel, that was like a hint at what might be going on, because there's a chance that it'll bust through the channel and it'll just widen the downtrend. But it broke through and kept going. So once it kept going past the last swing high, that signifies the end of a downtrend. So it's up, y'all. It's up, pretty up, pretty up. But here is where we start positioning ourselves for our trades. I don't see anything here as far as my edge. If I was trading the SPY, I don't see anything here. All right, go down to the related. Oh, I see something here. I see something here. So you have to go down and draw structures in your relatable time frame as well, so you can manage your trade. So this is a level, it looks like. Right? It's like a level there, right? So what do I see? I see a pin bar. Let's see, draw this here. Tops. Bottoms. Don't see what you want to see. See what the market is giving you. Don't see what you want to see. See what the market is giving you. So this is what we see, right? And that's a complex one right there, because we have us an ascending triangle. Right? Let me bring this. So we still got two in there. All right, boom. So what do I see here? All right. Now, remember, we're putting all of our stuff together. Like, as we get to different ingredients to the recipe, we're going to start looking, and the more we practice, the less we're going to be leaving out. So if you can see here, this level will extend across. So this is, in essence, bouncing off of a level and bouncing off of this resistance area. I see it coming down tomorrow a tad. But what does that mean? I look down here and I see a momentum divergence. Matter of fact, here we go. Excuse me. I still see strength in the MACD on the daily. Right? These structures are not from the daily. These are from back there. But I see strength in this MACD. So I like that. And remember, the longer time frame trend holds precedence. I think I brought that up yesterday. So if the daily shows strength, and you go down into the 2 hour and that shows weakness, that trend is going to be short-lived, because the longer trend, the daily, holds precedence. So being that we know that the daily shows strength and a momentum divergence, I like this on a bounce. I like this if it comes down some more. I'm actually looking for it to come down some more tomorrow. And then I like it on the bounce, because on the longer term time frame, on the daily, it shows a momentum divergence. No, it shows momentum in the MACD. Right? So we want to see what's going on in this red bar. What do? We go down to our relatable from the 2 hour, and that would be the half an hour. this is what we see on the relatable. So the relatable is also showing a momentum divergence. What do we know about momentum divergences? That if there's a new high in the MACD and there's weakness in the chart, we're buying the weakness. All right. We are buying that weakness. And that's what we see here. So tomorrow, I'm expecting this to come down some and fall to this level before it bounces. Somewhere in this area. It's going to fall tomorrow. That's my edge. It's not 100%. Keep that in mind. None of your decisions are 100%. No one's decisions are 100%. For that matter, no one's decisions are 100%. But there's high probability of that happening. That's what we're shooting for. High probability situations and not over leveraging. That's it. That's it. That's all we're doing here, y'all. We're not over leveraging. And we're looking for high probability situations. That's it. The key is to learn what the high probability situations are. And that comes from tapping in Cheef and chart. And as a matter of fact, that also is going to come from Options Made Easy Bootcamp. It's a good time to mention that. Me and my mentor, coach, the person I learned options trading from, we done collabed and we're doing a boot camp because we heard people need live training. Like they like the courses and the courses are dope, but they would like live training. So we bring it to y'all. Start September 4th, 4 weeks of live training by myself and my options coach, Todd Billionaire. And it's 4 1.5 hour sessions for 4 weeks. So one each week. Everybody gets lifetime access to the intro to swing trading course and all of its updates. That's everybody. So general admission, 197, you get the 4 weeks of coaching, live coaching, and the course for lifetime and all the updates that come with it. VIP though, they get, not only do they get the live training, right, but they also get an extra half an hour of Q&A with me and Todd Billy. And they also get a workbook. So you can keep track of what you're learning and hammer home the concepts. So that's VIP. You might want to, you want to be VIP. So that starts September 4th. It's limited seating. So make sure you get your seat ASAP. But this is what we're doing here. We want to put you in position to know what the high probability situations are based off of our experience. So based off of high probability situations, in my experience, this is going to come down tomorrow. And I would like it to fall to this area here because, I don't know, I believe that's the next area it should stop at. Maybe that's, I would like it to stop here, right? And to bounce through, right? Because if it drops, but then bounces through this here, it's going here, right? If it bounces and bounces through here, I like it above here, it's going here, right? That's the next stop up on the 2 or the half an hour, actually. So let me see. So above on the 2 hour, above 431, above 431, I like it. Because after that, at 431. The next stop is all the way up here. It's up. Like, this is why we need to be buying. Like, we didn't know though. We didn't know. We didn't know any better. We're starting to learn now. But they say the stock market is one of the illest places that people run from when there's a sale. Pardon me, just got a text. Stock market is the illest place that people run away from when there's a sale. Right? If you would have been buying down here instead of crying and whining because you didn't know any better, but now you do. Next time stuff falls for your long-term portfolio, because that's what I suggest that you, this is not financial advice, trust me. But what I suggest is when you get these outside returns, start using some of those profits to buy you some dividends, right? Some long-term stuff that's going to pay you forever. So yeah, that's what you want to do. But when this happens, that's where you want to be putting that bread. You'll have bread to the side that you done made by trading options. And then when the stock market falls like that, that's when you back the Brinks truck up. Back the Brinks truck up, and you dump a load on. And then you ride the wave back up. You don't buy when it's already up. You buy when it's down. It's like you don't go to the store when the milk is $8. You want to go to the store when the milk is $2. You dig? Same shit. So let's go to my stock. Show y'all what I did. So y'all know I'm still in the play. I'm still in the play. So what's today? The 18th. So yesterday, 17th. All right, so boom. What happened? So I think this is a level here. Yep, it is. It's just not drawn in here. I took calls here. Took profit here. And yesterday I took calls here. Right? Because my edge is pin bar at support, and plus there was momentum in the MACD. It wasn't a new high, but it was the fast line was still above the red line, so I took a chance. And plus we're on an uptrend. Pin bar at support. I took calls here. It came down some more and bought another one here. So today it dropped some more. So I'm averaging in. So this is why knowing your relatable time frame counts for something, because now I'm averaging in. So yesterday. So yeah, I think I took profit here and 16. Took profit here. It dropped. Took calls here. Dropped again. Took another call here. Altogether, I have 4 contracts now. And they all got cheaper. The cost of them got cheaper because the price kept falling. But only reason I was grabbing is because I seen strength in my trading time frame. Like, I see the new highs in the MACD. So any weakness, I'm buying it, especially on the daily. because the later time frame holds precedence. So if I see a new high in the MACD in a red bar, where we at? 16. Like I see new highs in the MACD with this red bar, right? A new high in the MACD with this red bar, right? So that signifies bullish momentum. So what's going on down here is secondary to the daily. So any weakness, I'm buying it because on the longer term time frame, I see strength. But the reason why I'm confident in averaging in is because of that strength. Plus, I got time on the contract, right? I got time for it to happen. And plus, my strike price ain't all wow. I got a 46.50 strike price because the next level up is 46.89 once it breaks through, right? So I don't think it's going to break through this week, but maybe Monday, right? But until then, I'm going to be shaving it off. I'm going to be shaving profits as it goes there, being that I averaged in. I got more contracts than I actually want to have, right? So as it goes up, to this next level here, I'm going to be shaving off contracts. So I want to take some risk off the table just in case it gets here and wants to come back down. And then, now we eating up time on the contract, and that's not good. So this is called managing your trade. This is a damn range here. You don't want to be trading in no ranges either. Told y'all about that because it's mad unpredictable. You want to trade in these things here, these trends, not when it's trading sideways. So right now it's in one of those sideways movements because it's consolidating the strength that it had all week. So with that being said, I'm looking forward to go to this level first, in which I'm going to probably sell about 2 or 3 of those contracts. And then hopefully it does that tomorrow. We'll see what happens. We'll see what happens. You can't predict the market, but I did say the market was going to go down tomorrow. So may not happen till next week. Tomorrow is Friday. So this is an interesting trade that I'm in. We'll see how it play out. But like I said, we're looking for high probability situations. We're not over leveraging. That is trading in essence. High probability situations and not over leveraging. The object is to know or learn how to find those high probability situations and recognize them. It's your man, Don Bucks. Make sure you hit the like and subscribe button and the notification bell. Want to learn how to swing trade options? Click the link in the description. I think it's maybe 2 $50 courses left. Also, if you want to tap into the live training with myself and my coach, Todd Billy, make sure you also hit the link in the description and register starting September 4th. Options Made Easy Bootcamp. Get your seat, get your seat, get your seat. If you want to learn how to trade these options and reach your goals faster, man. So, yes, with that being said, see you tomorrow. Oh, no, can't leave without this. Remember, it's no competition. It's you versus you. Now, I'll see you tomorrow.